Well, good morning or good afternoon, depending where you are, and welcome to the latest in the Russo-British Chamber of Commerce webinar series. I'd like to start today by thanking the Raven Property Group for sponsoring this webinar series. Today's topic for discussion is commercial property, which is a subject of huge importance to every business, especially in this time of economic hardship caused by the coronavirus pandemic. My name is Alf Torrance, for those who don't know me, and I'm the Executive Director of the RBCC. And today's expert panel is from JLL, a global real estate consultancy. I'm delighted to welcome Anders Lilienstolp, CEO of JLL Russia and CIS, Alexei Efimov, the head of the office group, and Tim Millard, head of advisory group. JLL, of course, a household name in the world of real estate. Very grateful to all three of you for taking the time to be here today. And of course, as always, thank you to RBCC members and friends for being here as well. Before we get started, the usual ground rules. After I've finished, Anders, Alexei, and Tim will make a presentation lasting about half an hour. I'm sure many of you will have lots of questions to put to the panel, so please use the hands up function on the Zoom app to let us know if you've got anything to ask. However, by far and the best way of getting your question heard is to use the chat room function. Myself and my team will be monitoring it throughout the presentation, and we'll pick out the more popular themes. Please put your name on the Zoom identification tag. If you can't do that, please include it with your question. As always, we'll have everyone on mute. If you're asking a question, obviously take yourself off mute, but most importantly, put yourself back on once you've finished your question. We will be recording the webinar and we'll post it this afternoon or tomorrow. And the panel team have kindly agreed to release the presentation as well, should you wish, and we'll post that on the website. Anders, this extraordinary time for business. Russian UK governments initiating huge economic packages to support business through the crisis. I think the one area they both shied away from has been property and rent, and I know everyone in the audience is very interested to hear your perspective on this extremely critical issue. Welcome again, over to you.
Thank you so much. Again, it's a pleasure for us to join you today, both on behalf of me, Tim, and Alexei. And yes, I agree totally. It's an amazing opportunity actually today. It's actually time to make money and to save money in real estate. And of course, real estate is not only from an economical aspect, it's something actually we are using every day, and maybe even up to 80% of our time. So it's money and emotions involved here. And I hope that during the commercial real estate class, and even though we will focus on offices, we will also talk about the other ones. And obviously we're not in the first crisis in Russia, but the first one not man-made for a very long time. And of course this gives us a lot of insecurity, uncertainty about the markets, but as we know, that is also an opportunity. And what we have seen so far is of course a big disruption, and less revolution rather than evolution of such things as consumer behavior, white-collar work behavior. And when we talk about consumer behavior, of course, as Tim will come back to very soon, that our retail and warehouses, logistics centers, etc., have been very much affected for such a long time, is actually happening. And we are far behind Europe so far, but now finally we have a catalyst out there to see this to prevail. And when it comes to the use of office space, Alexei will give us a big insight on how we believe it will be used in the future. But again, about making money, Tim will talk also about the investment market, which is very interesting today, because there are actually economical fundamentals, as you mentioned, and a new behavior in the markets when it comes to key rates that are being cut. Mortgage rates are actually following. We see the cap rates are staying as they have been for many years. We have less buyers, but we have more sellers. We still have a high liquidity in the banks and less of other opportunities where to park and invest the money. That means that the real estate market today is very interesting for our investors, and it's a great chance to actually make money. When it comes to save money, actually, here is a very huge opportunity as well. If you're a retail client or an office client, of course, this is the time when you can actually look upon your office costs, how you use your office, and what currency you're using, how flexible you are with your workspace, etc. There's a lot of opportunities again, and making money and saving money. And it will be a pleasure for me to hand over to Tim to go deeper into these aspects of real estate market of today. So thank you so much. And Tim, please take us into the depth of investment market, etc.
Right, thank you, Anders, and thank you, Al, for the introduction, and thank you very much for the opportunity of doing this joint presentation with RBCC, and thank you very much to our friends at Raven for sponsoring it as well. So just very quickly, I don't want to focus too much on the macroeconomic factors, because I know that this is covered quite a lot in RBCC seminars. But there's a few interesting things happening at the moment, and we've also looked at this in the perspective of previous crises, or at least the last two, and the change that we've seen happen. So the GDP growth expectations for the decline this year, depending on who you talk to, you can get a huge variation. This seems to be the consensus at the moment, that it's somewhere between 6 and 7%. Personally, I don't think it's going to be anything like as bad as that. And I subscribe to some of the more optimistic projections where we're talking about a -2 or -3% GDP this year, with probably quite a rebound next year. And there's a couple of reasons for that, which I'll touch on too. The interesting thing at the bottom left here is that inflation has stayed low. I don't think we're going to see very much change in inflation. Inflation now is very much under control. And that's been one of the real success stories for the management of the Russian economy over the past few years. And another couple of reasons for that I'll come on. And although unemployment has gone up, we haven't seen anything like the changes in unemployment that other countries have seen. I mean, we've seen the huge increases in the US, for instance, where now it's 41 million people drawing unemployment. We haven't seen anything like that in Russia. We have what is often seen as a weakness for the Russian economy is a very large share of government or quasi-government companies in the economy, but in the current circumstances, that's actually very much a positive, because they keep employing, they keep paying people, and they keep spending money. And that's whereas you'll see in many other Western economies in Europe and the US, the mechanism for support is giving money out to pay workers or to support small businesses, etc. In Russia, it's done through the mechanism of the government organizations continuing to spend money. And here we can see that, in the bottom right, the maximum change in the exchange rate was only 18% during this crisis. And so in the same way that inflation was under control, the currency hasn't really changed very much either in a historical context. And that is without any change in the central bank policy rate. In fact, the central bank has been very supportive. They cut their key rate from 6 to 5.5% just recently. And the expectation is there'll be a further cut, maybe as much as 1% to 4.5% at the end of this month. In fact, we're seeing that the oil because the oil price is rising, it's up above 40 at around about 40.1 this morning, where it was below 20 not that long ago. We're seeing the ruble strengthen, with the ruble now at this morning 68.25, which is a level not seen since the beginning of March. And we're essentially at a level now where the ruble has recovered all its weakening from the drop in the oil price and is back to a level that it was at the beginning of March. That gives the central bank more leeway than they otherwise would have, perhaps, for cutting the policy rate further, which will be a positive for stimulating the economy. And because of the other things we're seeing, particularly on the exchange rate, unlikely to have the negative impact on inflation or the exchange rate that we otherwise might have seen. So, that will continue to improve, I think. And it seems as though perhaps the impact on the Russian economy may be fairly short-lived. The other bonus from the improvement in the oil price, above $40, we are now approaching and getting close to the break-even price for the Russian budget, which means that the Russian budget will be returning to surplus fairly soon. And with that, it will give the government some more firepower, obviously for some spending to support the economy, but more importantly, from my perspective, to continue its investment in the national programs over the remainder of this year and next year. That will have a direct positive impact on GDP, which will support the big rebound next year, and some indirect impacts as well. And a number of those programs, in particular infrastructure, roads, housing, and bizarrely, but later I'll talk about it in other ways, the digital economy, are all strongly positive for the real estate market as a whole, and that's why I expect that we see improvements in the market. Slava, can we go to the next slide? So a little bit about what's happening to investment into real estate in Russia at the moment. And when we say Russia, it essentially means Moscow, because the vast majority of investment in Russia goes into the Moscow market. Unsurprisingly, there's been quite a big drop this year in the first quarter, but not as much perhaps as we would expect to see. Now, we expect there will be a slowdown in Q2 and Q3, but I think that probably from the second half of Q3, and so the last 4 or 5 months of the year, we will see quite a lot of investor activity. Several reasons for that. Firstly, the central bank policy rate obviously has dropped. There is, as Anders was alluding to at the beginning, a lot of liquidity with the banks and a lot of appetite to lend. So financing costs are probably at almost historically cheap levels that we haven't seen for a very long time. Predominantly in rubles now, not in hard currency as it was prior to the 2008 crisis. And when you look at the spreads for the yields for Russian real estate over comparable real estate in other markets, it is actually a very, very attractive market. And the returns you can get here are very large compared to what you can get in other markets. Adding to that, there is a very large wall of dry powder in real estate funds globally, which is available to be spent, has to be spent, and will be chasing yield. Although Russia has been an unattractive and unfashionable market for the last probably 4 or 5 years, actually, since 2014, 2015, fundamentally, it ought to be a very interesting investment market. And although it's been unfashionable, it will only take 1 or 2 outside investors to come back to the market, people to see the returns available, and I think then you'll start to see that quite a big wall of money potentially comes to the market. Now, at the moment, pricing is challenging. It's difficult to know what things are actually worth. I think underlying asset value hasn't changed very much, but it's quite difficult to assess cash flows. But that's very sector specific. So obviously hotels, and we've got a hotelier on the line, so can probably touch on it a bit later. Obviously hotels have had a very large impact to their revenues, and shopping centres and retail, not as large an impact, but a fairly significant impact. How long that takes to correct is going to be the big question mark, although I suspect that it's quicker than a lot of us think. Offices so far have seen very little change in terms of valuations and cash flows, but I think that will maybe change, and also how people use offices will change, and Alexei is going to touch on that a little bit later. But the big winner is warehouses. Warehouses and logistics had become a sexy asset class. Sheds are sexy globally with the rise of e-commerce and direct deliveries. We are seeing an acceleration in that process in Russia, and the industrial and warehouse sector is the one that's clearly outperforming and is going to continue to outperform. So in the short term, there's a little bit more risk. It's very hard to price the risk, but I think the disruption is fairly short term, and we'll see a rebound fairly quickly back to pricing levels pre-crisis, and actually continuing to rise, because we're at the bottom of a rental cycle and we're at the bottom of a cap rate compression cycle, and both of those will be strongly supportive of capital values, which I predict over the next 2 or 3 years will rise quite strongly. So actually a very good time to buy if you can find the product. I will leave it there, and we're going to move on to the office market, and I will pass over to Alexei.
Thank you, Tim. Thank you, everybody. I'm delighted to be today on this panel with RBCC. So let me talk a little bit about the offices. I have to make a comment that this is so-called, well, I will give some general data about the office, but today we thought it would be a good idea to give you a so-called occupiers view, because we think there could be few office occupiers, tenants, attending this call today, and therefore this is the view we took. So the first slide, as you can see, tells you that we will see less square meters delivered to the market this year as opposed to the originally planned ones. Yeah, so 350, 345,000 square meters. This is our revised forecast for this year. And basically what we can see is that the development activity in Moscow will drop. Mainly people continue building and developing Class A, 63% will be Class A. And decentralization is a quite stable trend, because you don't have too many landlords, and Moscow is now fragmented into so-called submarkets. And the situation is quite different from the central business district, which is the Garden Ring in Moscow, and other submarkets. Next slide, please. So the vacancy rate will go up in 2020 and 2021. We used to be sub 10% prior to the pandemic, but we strongly believe it will go up to 11, 12% by the end of 2020, and it will be more drastic in a Class A, which is the quality space. Yeah, so we think quality space vacancy will rise to 20% or up to 20% by the end of 2021. Quite a big change, yeah, from being like so double to what it has to be before pandemic. Yeah, so now many occupiers, I would say everybody, is talking to their landlords, seeking for some rent-free periods and discounts and etc., restructuring their leases. I'm talking now office segment. Yeah, and of course, something will happen by the end of this year, because again, these conversations will end up, we think, when we're back to the offices June, July, I think, and we'll see how the market change. Next slide, please. So this is basically the continuation of my thought of the previous slide, that before January this year, so rents starting to grow a little bit, and therefore landlords were quite a bit optimistic. But now, because of the current situation with COVID, we can see that the market moved back, or is again moving to the tenant side. You can see these graphs, yeah, and still, it's quite challenging to find a good office in the CBD if you are big enough. But if you're coming with a 5,000 square meters and less, you have a good choice. Yeah. So Class A, you have less vacancy, and it depends on the submarket. Yeah, and still the demand is coming from the business services, manufacturing, banking, and finance. Next one, please. Well, dollar rents versus ruble rents. Probably it's an obvious thing, but we used to be, before 2014, Moscow office market used to be in dollars. Now it's less than 5% remaining in dollars. So it's a ruble market with a few exceptions. And we think this situation, the COVID one, will lead to no dollar rents whatsoever. So it will be extremely difficult for our fellow landlords to renew their leases and offices in dollars, just because the demand will be in rubles. Yeah. So we forecast that the share of available space, because people will continue optimizing their rental cost, and they will release some space. Yeah. So we think that rental rates in general will drop. It's difficult to say how much, but when your vacancy is going up, your rents are going down. And we'll also see that we're coming to an interesting times where you will have quite a big chunk of so-called secondary space, where people will not need occupiers. Office occupiers will will not need that much office square meters. And some of them are saying, well, it's great to work online. We don't need to come back completely in the same headcount as we used to be before COVID. Next one, please. Yeah, so basically this gives you an idea and the feeling about what submarkets we have in Moscow. So you can see the CBD numbers on the left upper end. Yeah, so the stock is quite significant, but I mean, the vacancy in Moscow CBD is still quite low. I'm talking about Class A space. You can see just sub 6%. If you look at Moscow city, it became quite a big submarket, 1.1 million square meters. Yeah, and again, the vacancy is still quite low there. We'll see what happens by the end of the year, but this is the vacancy rates as we speak. And then if you go beyond the Garden Ring and beyond the third transport ring, then you can find plenty of space, and the vacancy is much higher, especially outside of the third transport ring. Next one, please. Some forecasts from JLL. As we said, this year will be the least regearing year for both landlords and tenants, and we think this conversations should end up at Q3, Q4 this year, because they have just started. Now we are expecting office occupiers to be slowly but surely coming back to the offices in the middle of June. And we believe that we will see reduced rental rates, which will be inevitable in this situation. In 2022-2024, we think a little bit longer term forecast, people and occupiers will start changing their approach to the office space, will be more flexible, using more desk sharing and remote working. We'll see what happens with the flex operators. Now in Moscow, they're very active, and we think this trend will continue. So if you, in terms of completions, so something which had been started already will continue and should be completed, while something which has been just designed could be postponed and significantly postponed. Yeah, and you can see some vacancy rent forecasts. These are the blended ones for A and B class. So 11% Moscow, 10% St. Petersburg. And as I said in my previous slide, we're expecting around 345,000 square meters, new ones, to arrive to the market this year. And now, an interesting topic about office re-entry. Anders, would you like to pick up here?
Please continue, Alexei.
Oh, okay. So firstly, I would like to say that we believe that we should be able coming back to our offices on the 15th of June. I'm talking about okay. So you can see the light at the end of the tunnel already. We were all trying to come on the 1st of June, and by the way, many companies are already using the offices and coming to their work, though not in full capacity, but some companies has not changed our plans. We as JLL, for example, we are planning to come back on the 15th of June, if nothing changes, of course. And this is just to give you an idea in terms of the timing of office re-entry. So if you give me next slide, please. So as I said, office workplace shouldn't be the same and wouldn't be the same as prior to COVID. And a lot of queries are raised by our clients and including ourselves in terms of how do you operate and how do you use restrooms and printing areas and cafeteria and et cetera, So all these areas you can see on this slide are exposed to risk, and you need to mitigate this and take care of them. Next one, please. So what we are doing as JLL ourselves and with our clients, we're basically helping our customers to plan the re-entry procedures, develop and implement them together. So these measures are like divided up into 3 parts. So building entrance and reception, how to use elevators and the staircases, and what do you use, and how do you use your cafeteria and eating facilities. So you can see it's quite an intense plan, and we strongly believe that all office landlords and occupiers should plan for re-entry properly. And this is what we are now doing and are very busy with. We have a special team who is doing this. And as I said, we help different companies to have a smooth re-entry to the office. In terms of re-entering capacity, our view is that 10 to 30% of the personnel of the headcount should be back to the office, potentially on the 15th of June. And then you increase it step by step gradually by 10% to 40, 50% on a monthly basis. Yeah, and you observe the situation. Next one, please. In terms of the workplace, as I said, you have to keep distance. Your desks and meeting rooms should have a specific policy in terms of how you use them. For example, ourselves, when we re-enter the office, we will not be using negotiating rooms and meeting rooms at the first month, just to avoid any potential risk. And of course, some additional hygiene measures should be implemented. Next one. Yeah, and then employees and visitors. Yeah. So what I like in this slide is the welcome back packs. This is highly recommended. It depends on which industry you're in. Yeah. Each employee and visitor should receive a so-called welcome pack with the recommended content, including some PPE masks, gloves, alcohol-based sanitizer, and other stuff. Isolation room, if you need it, should be available as well. You should have a welcome back ambassador, in our opinion, who helps to make sure that these rules and procedures are followed. And yeah, a mobile app should be adopted, and some chips could be used to measure how the workplace is utilized and whether these measures are followed strictly. So life and safety is the first priority to many occupiers re-entering the offices, and this is why we believe these rules are very important. So this is what we would like to tell you today. That's probably it, I think, for my part.
Can I just add one thing, Alexei, on that point? Of course, very important is the human factor here, because as you might see, it's very easily becomes like a science to go back to work, and considering how you will talk about the retail market very soon, it of course is really important that one makes the workspace as something a little bit warmer just than the science space is unfortunately possibly becomes. So it's really important to address such issues as worries with the employees, comfort when coming back, and at the same time keeping it safety and healthy.
Okay, so probably Alpha team, back to you guys.
Yeah, thank you, Alexei. I will come on to the retail market in just a second. Before doing that, I've seen a couple of questions come in from Stuart Lawson, which are based on the office, so perhaps this is the best time to deal with them. When talking occupancy, how does that deal with the new health and safety requirements? Well, as Alexei has just pointed out, there's going to be some counter trends. Companies will continue to have probably more flexible working processes, opportunities for people, more home working, and so less people in the office at any given time. But obviously, they will need more space per employee because of social distancing, and you may even see a move back towards individual offices and more partitions and more enclosed private spaces, all of which use space, are much more space hungry. So difficult to see the overall balance at the moment, but I don't think in the short term at least, or even in the medium term, that you're going to see a huge collapse in demand for office space because of people moving to more home working, etc. What you may see is that people have a mix of office spaces and how they consume it in their portfolio. So they'll have a base office, but they also may use some co-working or flexible working space, which they can use on a flexible basis, and allows them to scale up or down. So although there are some well-documented problems with the co-working model, in particular how WeWork applied it, overall it's probably something that is going to come back, albeit and probably in a different fashion to what it was before. And elevators in high-rise buildings, yeah, that's a problem. The only way you can manage that really is basically by, again, encouraging flexible work practices, which means, you know, people coming to the office at different times of the day. So everyone's not arriving all at 2 minutes to 9 in the morning and queuing for the lifts, but you have to stagger work times, you know, group lifts, maybe have different floors have different times for the lifts, or you stagger it so that everyone's not going to the same floor all the time. It takes management, and it's difficult, but it's achievable if you go through it properly.
Yeah, if I may add here, Tim, I think in Moscow City, for example, we have the concentration of the high rise, and the elevators are designed for 20 people, roughly speaking, so quite dense. You'll see some queues, definitely, because we are doing some property tours now with our clients, and what they're doing from the management perspective, they allow only 5 people at a time in the elevator, which is designed for 20 people. So basically, yeah, that's what's going to happen in practical terms in Moscow City, for example.
Tim and Alexei, on that, funny enough, we have an office in London and Moscow. I'm actually just, as we speak, going through the government guidance from the UK government side. Very detailed and actually very helpful. Has the Russian government or the Moscow City government produced similar guidelines?
So the guidelines at the moment, if I take that, and Alexei can probably come in. So there's a lot of detailed guidelines and rules and regulations around about retail and reopening retail, because obviously that's something that's more live and is happening at the moment. So, you know, how many people you can allow in the store based on store size, how you keep people apart, how you let people queue outside, how that's marked on the floor, you know, how many people can come into a shopping centre at one time, how you do circulation, do one-way systems and manage that. There's a whole lot of rules and regulations around that at the moment for retail. I would say there's less for that for offices at the moment, but I would think based on our love for rules and regulations in Russia that we would be seeing something along those lines coming, particularly as we move back into more things opening up. But I don't know, Alexei, if you've got any more insight on that. If not, we'll move on to retail.
You have some.
Sorry, Alexei, up to you, and then I'd just like to make a comment.
Sure.
Alexei,
go ahead, or...
Alexei, go ahead, please, if you have anything to add to that.
Yeah. Okay, sorry. Yeah, I just wanted to say that, of course, there are some recommendations coming from Rospotrebnadzor and from the Moscow mayor, and I think these are the general rules. I spoke to a friend of mine yesterday who told me that basically these rules were developed by one of the leading global consulting firms, so not by the mayor office himself. Yeah, so this gives you like hope that these rules are quite comprehensive and helpful, as I rightly said. Yeah.
Okay, thanks. Stuart?
Yeah, I just wanted to make 2 comments, sort of going in opposite directions. One is that obviously if you're, let's say, a bank and you can't fill your office because of social distancing, then the rents, you look at, you know, your rent numbers, and I think that will push softness into the market because you can't get the same utilization even if you're doing work from home. But the other thing that occurs to me is, you know, real estate's a long-term business, and you're looking at long-term rents, and you DCF them and so forth. And this virus seems like it will never go away, and we've got to make all these long-term adjustments. But once the vaccination's in, and once it becomes, you know, a yearly flu, like every other flu, then I wonder whether or not we're going to hold to all these extreme measures. And then if I was an investor, I'd be looking at how does that affect the pricing now versus the future, I guess.
Yeah, thanks for that, Stuart. You know, I agree with that, and I think part of it is, and there's a lot of investors who have raised money specifically to go out and buy now on the basis that they see that this is a short-term disruption, but this has caused a downward shift in pricing of a long-term asset, which actually means there's good value out there at the moment. And I wouldn't imagine that, you know, that the long-term effect is as dramatic as a lot of people think, because a lot of the other things we're seeing is actually people sat at home want to go back to the office and interact with other people, and people are quite keen to do it. So I think it's only a short-term disruption, which is why I think there's value at the moment. I'll just skip on quickly to cover the retail and the warehouse sector, and then hopefully there'll be some more questions. Slava, if you can bring the presentation back up, we'll do retail. Yeah, go on to the next one, Slava. So the retail market, just very quickly, and a couple of things to say here, really. Obviously, the market has been particularly badly hit in terms of what's happened to retail sales over the last 2 months. April, year for year, like-for-like sales were down 28% for Russia, which is highly unusual, where we've seen over the last 3 years, there was a dip in consumer spending in 15, but that came back positive basically in June 2016, and we've seen positive consumer spending numbers in real terms since then. And retail and consumer spending is a very important engine of the Russian economy. Although obviously a lot of it's underpinned by the primary extraction industries, retail sales and consumer spending, in terms of the percentage of GDP growth, typically make up around about 30 to 40% contribution to what's happening to GDP growth. And it's been a prime driver in the positive gains in the last 2 economic cycles. So it's very important, and it'll be interesting to see what happens to retail. We're not seeing at the moment any significant increase in vacancy rates. Obviously, tenants have had a lot of extra rights that have been legally afforded to them in terms of rent holidays, etc., which allow them to weather the storm. It's caused some short-term pain for the landlords. There is some stress. I don't think there is de-stress yet. And what we're particularly seeing at the moment is that the banks, actually in all sectors, but particularly the retail sector, banks are being very pragmatic in terms of the accommodations they're coming to with landlords and with property owners, which I think is going to keep a lot of stress out of the market, unless we see that the COVID situation drags on significantly, or there is a painful second wave. Russia, you know, what's going on will reinforce 3 trends. There will be a gap between the best shopping centres and the rest. We still see a lot of tenant demand, but it's much more selective than it was, and so they want to be in the best shopping centres and the best locations. Others will find it to struggle more, so there'll be a bigger difference between the best and the rest. We will see a reimagination of retail space, which is happening globally, but wasn't really happening in Russia, in terms of multiple different uses, much more imaginative types of uses, you know, perhaps co-working and co-living and retail all in the same space to cut down transport and other things. But it'll continue to be the case that retail will be consumed slightly different in Russia than it is elsewhere in the world. You know, it's much more around entertainment than around shopping. The variety of uses makes shopping malls continue to be attractive, as does climatic factors and other things. So people still want to be inside and inside shopping centres. So I think shopping centres will continue to be successful, barring, you know, a continuous shock. But it's clear that it will also reinforce a trend towards e-commerce and delivery, and that will support far more of the logistics, which then takes us on neatly to the warehouse market. We could skip on, Slava. So the warehouse market, I think, as I said at the top, this is if there is such a thing, it's the clear winner in the current circumstances. It was already a global sexy asset class, although there is some very short-term stress for certain classes of tenants in warehouse and logistics. Big extra demand from food retailers and from e-commerce and 3PLs, which basically means I don't think, although the next slide will tell you that we think demand is slightly down, there's quite a lot less deliveries this year than in previous years. And I still expect, numbers slightly different on the next slide, I still expect that we'll have demand above 1 million square meters. Vacancy rate is 3.5% to 4% at the moment, which is obviously very, very low. If we go on, Slava. So yeah, we expect demand to be down here 30% year on year. I'm not sure I see that being the case, but the Q1 was 50% down on Q1 2019. So we have to factor in that to the year as a whole. But demand remains fairly robust, and with vacancy rates below 4%, there's not much available space in the market, and I see it staying tight. I think we see a pause in rental rate growth now, but maybe for Q2 and maybe part of Q3. But I expect rental growth to take hold again at the end of Q4. And again, with a pause in cap rates, but I expect that those will go down, and it will be a sector that remains very much in demand. So that was it quickly on retail and warehouse. We've done 40 minutes. We've got a section here on St. Petersburg offices, but I suggest that we send that around afterwards and we move on to questions, Alf, if there are any others. Yeah,
no, that's great. Thank you very much for that fascinating insight. A question that springs to mind straight away is, I think Alexei said you're working on the 15th of June as the time that everyone starts reoccupying. Can you just explain what that's based on? And it might be interesting to hear from some of the people out there who may actually be agreeing or not agreeing on that, just to get a feel for that.
Yeah, if I may pick up here. So, well, we hear it from different sources and different people, and basically our legal team is very closely watching what's going on in the mayor's office, the mayor of Moscow office. And since they have started slowly but surely removing the limitations, yeah, we think that the 15th of June is the right date, yeah. And then, as we discussed previously, well, we have the big parade on the 24th of June, so something in between the 15th and 24th should definitely be the opening date. So yeah, this is basically what our sources say.
Yeah, good. Adrian, can I put you on the spot as the general manager of one of the biggest, most important hotels in Moscow? What are you planning on, if I may, if it's not a secret?
It's not a secret. I think quite a few of the hotels in Moscow are actually still open and operating. They're running with fairly low occupancies, but they're still operating with room service. St. Petersburg is slightly different because it's much more tourist orientated, and quite a few of the hotels have actually closed down there. Uwe is with us as well on the call from St. Petersburg. But for hotels to operate well, they need three things. They need corporate clients, they need leisure clients, and they need conference clients. In reality, Moscow is not traditionally a tourist destination in the same way as St. Petersburg is, but this is probably the first market that will come back with any consequence, for the simple fact that people are not going to be able to travel at least until the 15th of July. But if they want to travel overseas, there's a very good strong possibility that we will see an awful lot of local tourism. So that will stay within Russia, and the cities will have opportunity to benefit from that. Conferences are a very complicated business for us, because it automatically refers to groups of people coming together. And this is very difficult for us to put into place, and to have social distancing when there are breakouts from events as such. It's easy to manage if they're sitting down, but when they break for coffee and try to have discussions at these kind of points, then it's much more difficult to manage the people. But there are strong processes that have been put into place that have been parts of learning curves from around the globe. And then, of course, the individual businessmen, this really depends on global travel plans and how quickly people are starting to move again. But I think we can see, certainly from last week to this week, a lot of individual movement. So people are much more blasé about traveling, about walking about. The occupancies haven't increased dramatically, but there's much more awareness of people. I mean, we've had clients in the hotel saying you're much, much busier. There's no change in occupancy, but the people are coming now out of bedrooms, they're spending time, they're meeting people in the hotel. So there's definitely a change in attitude. And the 15th for us is the big day that we're starting or anticipating to see significant changes in restrictions. And of course, the 24th, there are heads of state coming from other countries. There will not be the invitations, I understand, have not gone to all of the heads of state a second time, only CIS countries. So the first time around, I think there were 60 or 70 heads of state expected in Russia, in Moscow. If these people wish to come, then I think they will be accommodated. But the secondary set of invitations have only gone out to heads of state of CIS countries, from what I understand.
Are you going to delay the start of conferencing in the hotel, or you've got, well, you said you had plans, but are you going to try and delay that? Or?
Funnily enough, we actually had an event that was scheduled, well, we had an inquiry for today, only for 10 people in a meeting. And we decided to go ahead with it in order to try and learn from the exercise and see what things needed to be done in order to allow a conference or a meeting to take place. And we actually learned quite a lot from the exercise. In the end, the event was cancelled. But the preparation allowed us to explore different aspects of it and to see where the shortfalls were. So we had the rooms disinfected yesterday, and we learned that we would probably not do this on too regular a basis because the chemicals that were involved meant that there was quite a heavy chemical deposit, shall we say, in terms of people being able to breathe and things like this. So we would do this a long time out in advance, but we were able to set up the rooms. Again, we decided to cancel any form of coffee break where the people would be standing, and therefore we would serve coffee to people in seated areas where we actually control the spacing. We've now got UV lamps as well, which we can put into the function rooms that help to kill bacteria within these environments and virus. And temperature checks both at the entrance to the hotel and at entrance to the conference room as well. But obviously preparation to any form of meeting is also based on making sure that sick people don't come to the hotel. Vet the people before they even get to the hotel, so make sure that they stay at home if they're showing any signs of even coughing or something like this, just so that we reduce that risk within the hotel. And some of the things that we mentioned in terms of office spaces are also applicable. You know, having this holding room if anybody shows signs and symptoms. We've got areas where we know the ventilation systems act differently and are a safer zone, if you like, in terms of people that would have the virus. So there's quite a lot of preparation being done, I think, on all sides. A lot of PPE equipment for the staff and for the guests attending the event.
Adrian, thanks very much for that. For those who don't know Adrian, I know he'll be well known to many of you. He runs Lotte Hotel in Moscow. Is there any comment from the panel maybe on what Adrian said? Or?
Yeah, just a quick one. The hotel is one of the departments in the advisory group, so something I'm quite interested in myself. I think one interesting point is what we saw, and the logistics of it and the reasons for this crisis obviously are very different from the last one. But 2015, what we saw, particularly after all the new infrastructure in Sochi and all the crisis that was coming, we saw a huge amount of spending from government organizations, government companies and quasi-government companies on conferences and meetings and events in Sochi, which was very much government directed. And I think you'll see, particularly where you have a lot of hotel owners quite close to local administration, I think you will see a similar level of support where a lot of government organisations and government companies will go back to holding a lot of meetings in a different way, conferences and events, quite quickly, as that's a way that they can support hotels and support the local economy, and particularly where a number of hotels have been, some of them for their own reasons have been accommodating doctors, a lot of them for free of charge, and so they will get that compensated in some way or form.
Great. Thanks very much for all those comments. We have a question from Andrei Skubko, and it is talking about Moscow shopping centres. You predicted 8 to 10% vacancy. He asked whether that's prime or across the board, all shopping centres. And he says what assumptions were used in the forecast, as he thinks that's quite an optimistic forecast. Over to the panel.
It's across the board. It's modern shopping centres is all the ones that we track. So it's not just prime, it's everywhere. And the assumption based on that is that we start to see the economy opening up from Q3 onwards, which is what we're seeing at the moment. We have, obviously we're in touch with retail landlords on a daily basis, and we're doing some shopping centre leasing at the moment, which is surprisingly active. But the underlying assumption is that we start from Q3, and it's also, we know that for most shopping centres, landlords have been in touch with tenants, and with 90% of their tenants, they've already reached agreements on rent discounts or rent deferrals and how that's going to work, and how the tenants stay in occupation. So typically that may be a rent-free period where they're just paying the OPEX. It's probably for Q3 somewhere around about a 50% reduction in rent, but then going back to full rent in Q4, which is more or less what the government legislation says. But tenants are happy with that. Clearly, it's different for some different ones because, if you're fashion and you've got different seasons and stuff that you have to restock, it's more complicated. But our understanding is at the moment that those agreements are being signed off. For 90% of tenants in most shopping centres, it's already been agreed. And there's no reason to believe that there's going to be any big change in vacancy going forward, absent, any big acceleration in infections or a second wave.
Great. Thank you very much. Andrei Skubko, would you like to come back on that or write a reply? Nope. Okay. A question I like particularly, office rent payment. If tenants ask for a 50% discount for 3 to 4 months, how does JLL react?
Well,
badly.
Well, depends on whom you're talking to. Look, yeah. But a couple of things from my side. Look, I think this crisis will definitely teach both landlords and tenants and improve their communication lines. So unlike before, these two sides will start speaking much more often, and this will improve. In terms of the 50% or 75% or 100%, it's really a case-by-case situation, and depends on the asset class. But if we're talking about offices, it really depends on whether you're talking about long-term relationship with your counterpart. Yeah, what are the specifics of your lease and etc. So, as Stuart rightly said, real estate is about long-term relationship, and it really depends on the specific situation. So, I think part of the question was whether it's a different reaction in London and in Moscow. Yeah. And the answer is probably yes, based on the fact that London leases are quite longer than in Moscow. Sometimes they're like 10, 15 years as opposed to normally 5-year cycle here.
Thank you. Yeah. I think we've got time for one more question. Quite an interesting question here. Some city real estate markets came to a standstill whilst others used technology to continue buying, selling, renting, etc. How did Moscow cope with this? And what are the implications for technology and commercial real estate moving forward? Actually, I've seen that from some of our members in London, and yeah, very interested to hear how Moscow has done in this respect. To the panel, I'm not sure who to address that to.
Well, let me try and do that one. As digital initiatives is one of mine, although I'm not sure the answer. I think the short answer and maybe the coward's answer of trying to avoid the question is, we don't really know yet. I mean, I think we've been very active for the first quarter of the year, and that's continued through April and May. But a lot of that, deal life cycle is quite long, particularly in the area of the market that we are. So essentially, we've been finalising things that we've been working on for some time. The question really is, has there been any new activity and what's happening, and have people been using technology to do virtual tours and things like that? I think the answer to that is no. I think people definitely probably reassessing what their office needs are. They are probably using some technology more in terms of how they design that, but I'm not sure it's a Moscow specific thing. I think we're quite good at implementing tools which are widely in use, and perhaps we're a bit more innovative in using them. I wouldn't say we're developing things here that we're doing specifically different, although we are quite good at using technology in general. Too early to tell, I think, whether the 2 months of everyone working from home has had a big effect on the number of transactions. It clearly has in the residential market, but in the commercial market, I think it's too difficult to tell at the moment. I don't know if Anders or Alexei's got anything else to say.
I can just add on that, of course, in sort of the crisis mode we have been, of course, our brokers have been using help by handheld cameras, etc., to show space. But in the end, it still comes down to that people need to go there, in effect. And of course, I agree with Tim that in Moscow, we haven't really taken that extra leap to find those virtual tours that we in JLL actually are using now pretty much widespread over Europe. And our plan has been to bring it into our Moscow office for quite some time, and we will bring it in very soon. Because I think that it's all about making it very comfortable and easy for the client. And this is a natural step we need to take. But so far, unfortunately, we haven't done it because, of course, it comes down to paying off and making sure that it brings enough value for clients and for ourselves. But so there's a crisis version and there's a long-term version. And the crisis version we're working on, and the long-term is not there, but it will come.
Great. Anders, as you've had the last word there, I think that's quite a good time to stop. There doesn't seem to be any final questions, and our hour is up. So just like to thank Anders, Alexei, and of course Tim for a fascinating insight into an area that affects absolutely everyone. As I said, we've recorded this webinar. It will be posted either this afternoon or tomorrow. And we'll also post the presentation, which was extremely interesting. I'd like to finally finish by thanking Raven once again, our sponsors for this series. And I'll hope you join us next week. We have 2 webinars running, and on Wednesday and Thursday, I believe. All the details are on the website. But with that, thank you all for participating, and look forward to seeing you again next week. Thank you very much.
Thank you.
Thank you.
Bye.
Thank you. Bye-bye.
Thank you. Bye-bye.